Hey, what's going on, traders? Cleveland here with another Monday market breakdown. It is the 9th of January, guys, and this is our second week of this trading year. I actually posted a Monday market breakdown last week that was amazingly accurate, but it had technical issues, so I never uploaded it. But the guys in our room, the top traders, we got in a lot of those positions, so hopefully this week we can execute on the same way we did last week. All right, so this week, guys, you know what we're doing. We're going to be breaking down our three pairs, the only three pairs that I trade. But this week, guys, what we do have is we have a special pair. All right, and every week we're going to have a special pair, a pair, you know, with not too large of a spread. I want you guys to get in these positions, but amazing trading opportunity, whether it be a breakout or a pullback or some type of mean reversion strategy. I'm going to be pushing you guys every week the trade of the week. Now, if it comes out to be on one of our three pairs, then absolutely. But what I've noticed is there are a lot of amazing pairs out there that do have awesome opportunities. And I want you guys to definitely take advantage of them. Okay, so we're going to start off here real nice, real clean with our Euro USD, and I'm going to go through, you know, week by week of what we've been going through for the past month or so, since this is technically my first Monday market breakdown of the year. Okay, so again, let's pull out. We're on our monthly. What I want you guys to notice is, yes, absolutely, we are sitting below the 2-year consolidation. Finally, all right. Yeah, I know we hit it off, and that happened last month. But it's good to see that it's actually sitting. I mean, we haven't retraced back up. We have these levels holding, which is amazing, because what that means is, guys, that U.S. strength could come in at any time. All right. These are the top traders that I was talking about. You guys need to get in that room. All right. So, but at the end of the day, what we're looking to see, guys, is we're looking to see those rate hikes come in. All right, we just had 6 FOMC presidents meet, and all but one mentioned that they are looking to do 2 rate hikes this year. The one that didn't agree with them said he could be looking to do 3 or more. All right, so we're going to get that U.S. strength. It's going to come in. That's just the way the capital flow business works. All right, when your currency is more valuable in terms of holding assets in it, because you're going to get a better coupon rate or better interest rate, then guess what? You're going to have a lot of foreign markets put their money into these bonds. Okay. And you're already seeing a lot of countries doing it. All right. So anyway, let's draw up some fibs real quick just to give us that framework of exactly how we should be executing and where we are. Now, if I draw up a fib here, just for, you know, old time's sakes, let's draw up a fib. Boom. You guys see, we broke that 61.8 a long time ago. So this fib really isn't very useful for us, but it also gives us a target. But that target is right at parity. So this fib, not so useful. Let's draw up some stuff that actually helps out. And if we need to do that, guys, we actually got to zero in. We really got to zero in. All right. So what we can do here is, boom, we can't draw up this fib here. We came up. This is where we consolidated for the entire 2015, 2016. We consolidated right here at these lows at this 23.6. All right. We tried so hard to break this level, but it never happened. The European economy can never really put themselves together. And then what happened, guys? Brexit and Trump and our interest rates really just killed it off. And now we're sitting here at these lows. All right. So if I pull over now, again, you guys see we don't need those highs right now. Those aren't the most pertinent levels for us as traders for the next couple of months. So let's zero in a little bit further. All right. And for us to zero in a little bit further, we got to get down into the weekly. OK, so coming from this high here down to this low, there is some important levels that we need to be talking about. All right. So notice here, guys, we came up 23.6, got tested. Now, this is still a very small retracement, but when it comes to high momentous markets, you really don't see that 23.6 get broken. You usually see it get tested and turning over. All right. We don't have any big U.S. news out until Thursday. So I definitely think up until Thursday, depending on what that news says, if it's bad for the U.S., I think it's job claims, we can see this market push back up into some highs here. All right. And I want to show you what highs that I think this euro could push up into. And what's interesting is today's Monday, we've already had some momentum come in. So I really got to start. I'm actually going to start pushing these money market breakdowns out Sunday, because I wanted you guys to get in this euro buy today. I just never pushed it out. So we're going to definitely start pushing it out a little bit earlier. So let's go over to the daily so we can zero in a little bit better. And I want you guys to notice a certain zone here. Okay. There's one I want you guys to notice is obviously this 23.6, but we have some nice structural zones as well. And we know that's what, truly matters. All right. Fibs matter because fibs are a self-fulfilling prophecy. All right. Fibs work because we look at them. But structure, that's true blue. Price action, that's true blue levels. Now that's also a self-fulfilling prophecy, but it's so much more reliable than Fibonacci. So right here in these '07 mids is where we see a lot of price action. Now let's drop a couple more fibs here. If I go to the Fibonacci retracement tool and I go to this swing high, all right here we got Trump's election. We have the high here, pull it on down. Notice again, guys, boom, we have some more Fibonacci confluence in that area at that 38.2. Okay, and I'm going to draw up some more one more time from this high here, okay, to this low. And what you guys notice is it gets close to that level. We're right here at the high $6s. Okay, so as of right now, when it comes to this Fibonacci confluence, I could definitely see this thing coming into at least the low 7s, high 6s. All right, so that's what my buy is looking like for this euro, and that has to happen soon. Unless that news for the US on Thursday is bad, I really need to see this price action push to the upside, because if any good US news comes out, guys, you gotta understand there are so many bears in this market that for any reason will want to sell this thing off. It will happen. All right, they will execute on those sells. All right, so your entry, what does that look like? This is what I want to see. This is what I want to see. So let me clear the charts off real quick. All right, I'll just hide them instead of clearing them off, and then we'll pop them back up in a second. What I want to see, guys, is I need to see this level hold here. All right, so if this level holds, then we have a high conviction that we do have buyers in the market. We do see that they want to push back up into those $6s, and we will potentially see this market come back up into these 7s. Okay, so if I show all the drawings, boom, you guys will notice this is that 23.6 on that larger fib. All right, we're holding that level. Okay, we could see this market come up. That's the 38.2 of that fib. All right, if we look here, this is the swing high, this is a swing low. We've already sat at the 38.2. Okay, if we can sit in this 50% area, if that 38.2% area, we could come up into the 61.8 of that move, which is right below the $7s. We just have a lot of confluence up here in this area. All right, now if I want to sell this thing off, if you want to sell this euro off, you got a couple of things going on. Now, first of all, this euro surged pretty quick. What I would have wanted to have seen was that euro actually retrace back down into structure down here. Now, yeah, it did hit off on the top of the zone, but you would have really wanted to see that euro pull back all the way back into the $5s, the low $5s, high $4s, and then you would have wanted to see it make that up move. Okay, and why is that the case? Well, think of it like this. If you pull down, if the market retraces, but never collects those buys, then when that move actually happens, and now we've had a move happen this Monday. Since that move has happened, we may not have a sustained up move. If this euro would have came down and ate up some of these buys and actually accumulated some more buying positions, we would have had a really nice up move. And I know, not at a higher degree of certainty that we would have definitely came up into the high 6s. But as of right now, again, guys, these low 6s may be what stops us, and then we may consolidate up here at these highs before that euro actually pushes and makes a move. And what's going to do that? A fundamental catalyst. So if you want to sell this thing off, if we can come up into these highs, into the dollar, into the get into $6s, that would be a potentially good selling position. But again, if the fundamentals come out negative for the US, it will also be a good buying position. So we just have to wait and see what happens. All right. And that's for that Euro USD. Now, if you want to get in this sell right now, or you don't think that, the level is going to come up, the market's going to come up into those highs, then you would want to see the euro start to come back down into these lows, into the $5 lows, and start to penetrate these levels. And then you would be perceiving this thing to go back into, the danger zone for this euro, all the way back down into the $4s and the $3s. And then potentially, again, we could break out. All right. So I think we'll actually get some bullish momentum to the upside on the precipice that news is good for the U.S. I think there are a lot of firms and a lot of institutions that will want to get in at a good price. So what you're going to see is that up move happen. And if that news is bad, if that news is good for the U.S. dollar, you'll see a very fluid sell. All right. So if the news is bad for the U.S., you might, again, see a continued slight, cute up move to the upside. All right, we saw that happen last week for sure. Now, moving over into the Aussie dollar, I love this Aussie dollar. I'm not going to break down the Aussie dollar as much as I just broke down the euro because, again, the Australian economy, guys, they had a 0.5 contraction in their GDP last year. They have no interest in raising their interest rates or decreasing their interest rates this year. You're really going to see this Aussie sell off. All right, it's really, again, all about when. So drawing from this low here to this high, this has been a very well-respected level, that high here at $1.78. And if you notice, we could never really get there. We just muddied around in the 77s. Push down, back down on the structure at that 68.2, and right now we're retracing. So again, I think we could see this Aussie retrace up into structure here, into the 74s, before we see that thing fall off. All right, and that's just because, again, we may see some good U.S. news come out, and there may be a lot of firms and institutions looking for that good U.S. news to come out. So they're going to want to buy this market up, get it at a better price, and put their real size, their real position on. Okay, so that's one thing there. Now, again, if you want to sell this Aussie off, I'm going to draw up a couple of fibs for you. All right, so if we draw from a high here to this low, you guys will notice we're not even at the 38.2. Okay, so you're not in your Aussie sell yet. If it happens, then you missed a trade. That's what happens, okay? Now, if we draw from this move here to this low, okay, we're not even at the 61.8. Okay, we've hit off at the 50, but again, look how fast this move is. This is a very momentous move. All right, so what does that mean? That means there's a lot of speculation in it. Okay, so what does that mean? Well, that means speculators take profit. Boom, you're going to see large retracements. The fact that we're not at 61.8 yet means that we haven't seen the sizable retracement that you usually see with a fast move. All right, so again, I would like to see that Aussie come up into structure right here in the, I guess we can call it the high. The high 73s, mid 74. So actually, I do want to somewhat move this level down a bit because I would feel safer to say if the Aussie can come up into this level here, I would love to sell it off. And that looks a little bit better to me anyway. All right. Now, again, if you want to buy the Aussie up, you got to buy it. You got to get in it all. You got to get in this Aussie soon. We're kind of consolidating right here. We've kind of broken out of structure there. Maybe we'll retrace back. And maybe you'll kind of be able to get in around these levels here and buy it up into structure. But again, the risk reward isn't amazing. It's not amazing. All right. So don't worry about buying that Aussie yet. I'm just going to wait on the Aussie sell up in the structure. Intraday, guys, again, don't listen to anything I'm saying right now because these are all swing positions. Intraday, we'll be doing a whole different style of trading where we'll definitely be catching some of the smaller moves, 20 pips, 40 pips. Okay. And so, yes, absolutely, we may want to buy that Aussie up into structure if we see it pan out intraday. But if you're trying to swing it, don't waste your time. The risk reward isn't there. GBP USD. Now, GBP USD is very interesting. We had Prime Minister, I think their Prime Minister, Theresa May, speak. And what she mentioned was she wants no part. She wants no part of the European Union to be involved in their economy, okay, in the UK's economy. So what you saw, guys, was you saw a huge sell-off, a gapping sell-off back down into the October lows. Okay, we're at the Article 50 lows here on this GBP USD. All right, boom. Okay, so now at this point, you got to think. You got to think to yourself, we gap down. Yes, again, as a technical head, that is good causation to, potentially say that there's an up move coming. But guys, this is a big fundamental play. And right now you have the U.S. market just closed. No markets are really open. No large institutions are really open. So when this GBP market opens up and the yen market and the Aussie market opens up, we really have to see what they want to do with this thing. All right. If they want to keep it and hold this level here, yeah, that potentially can happen. Okay. But at the end of the day, they could definitely break down on this $1.21 level. Okay. One of the guys in Top Trader just mentioned that we could see this thing come back down into the $1.19s. Okay. So again, guys, that's a big move and I absolutely see it happening. It's all about that entry though. Where do you get in? Okay. That's what matters. So do you get in via a breakout because the market's so momentous you won't get a retracement, or do you get in via a retracement where you see this market pull back to the, let's say this is the low, where you see this market pull back to the 2270s. All right. Do we think this market can pull back to the 2270s? I personally don't. I don't think so. I don't think so. I'd have to see. I would have to see this 23.6 get tested. Once I see this 23.6 get tested and broken, then yes, I do believe that we could come back up into the 38.2 and the 50% retracement, and I would be placing my sell entry around that level for sure. Now, if this market's fast and if it wants to move quick, then guys, again, you're going to get a breakout. Okay, and you're going to have to trade this thing as a breakout because you won't be able to get in that move. All right, and if you know anything about breakout trading, there are a couple of rules to it. We talk about it in the Top Trader course. So again, you can follow up there. But other than that, you got to understand that the risk reward in a breakout, it all depends on how high the move came in. All right, you don't like to see this up move and then the breakout because it gives you a weaker move. All right, so I don't like the breakout on this USD, GBP USD, and I'm trying to figure out how do I play this GBP short. And there's a way. There's a way, and that's what we're going to talk about today. Now, so if we go over to the GBP AUD, we already missed it. We already missed it. Look at this beautiful, beautiful short. All right. Now, look, we already just mentioned that anytime you have a 23.6% retracement, you have a high probability of that retracement level breaking. Look at what we got. Look at what we got. We have a wonderful 23.6% retracement. Boom, guys. This is a 300 some odd pip move. All right. That's the kind of move that you want to see. Okay. So we already missed that move. We already missed that move. So now it's just about, all right, well, do you believe that this move can retrace to the 61.8? Okay, can it come down to the 50? You know, but at the end of the day, guys, you're going to have a lot of institutions profit taking from this move. All right, so again, that move isn't the most gorgeous, but again, that's not the trade that I wanted you guys to see. I wanted you guys to see this GBP JPY. Now, when it comes to the GBP JPY, it didn't have as large of an effect. And we're still kind of sitting. We did break, okay. We came up, and then we did hit off on that 23.6% retracement. But if you look at this GBP JPY, I like structure. Structure gives me a much clearer pattern than it does on that GBP AUD. And I would love to see this thing come down into the 38.2. So if you look, guys, that's a 200 pip move. Okay, that's a 200 pip move just to the 38.2, and actually just had a little interruption. If you already see, we've already pushed down. I think it's around 20 points, all right? And I'm actually in this position, all right? I put a little sell limit at structure, and boom, I'm in. So there we go. And so look, guys, I'm looking to ride this thing out back down into these lows here, okay? So again, I'm not saying you should get in these positions. I'm not reckoning you get in any positions. I'm just letting you know what I'm doing, all right? So guys, if we push down into the 38.2, that's an amazing move. But look, absolutely, we could go to the 50, okay? And again, if the GBP's doing bad enough, you know, we could push into that 61.8. And if you can do that, then boom, guys, we got 700 pips of upside potential on this JPY versus that GBP. Okay, so guys, look, your profit is my motive. You guys get in that free course, Top Trader Rookie, on motivefx.com. Get inside Top Traders. These are my boys and my girls. We're killing it. I honestly think we're the #1 community online. And guys, look, again, I'll talk to you guys soon. We got a webinar coming up on Wednesday. Let's dominate. I'm excited. I hope this trade pans out pretty well. Okay, we'll see what happens. Peace out.